Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So in general, yesterday we have suggested the drop to 114.35, 114.50 area. So that's normal pullback as market has hit intraday major COP target. And since yesterday, as we have expected, should be the quiet session, since this is the session between the Fed statement and the non-farm payrolls release. So it was no necessity to show some activity, and investors mostly try to understand what really Fed statement brought to the market. And that's why we haven't seen any significant action. So today, closer to the United States session open, the activity should return, and we probably will get significant volatility, because this is actually the first non-farm payrolls release after the changing of the sentiment and the Fed statement, and that will be really important. So as you know, market right now expects 165,000 new jobs should be created in January. So and also all eyes will be on the wage inflation. So this is very important. So on yearly basis, it should be 3.2%. So any soft numbers compared to expectations probably will trigger the additional dollar weakness, and that's what markets will be keep an eye on. So, on technical point of view, as we said, overall sentiment on the market is not bad. So actually, market shows very good upside action, and we said that probably market could continue action a bit higher. Next target, but it will depend on how market will respond to the major support. So normal bullish market should shows the corresponding reaction on the support area. So this is our ABCD pattern. COP has been hit. Here we have got bearish engulfing, and market has turned down. Now it stands precisely in an area that we have specified. This is approximately 114.25, 114.47. This is a conference support. So and normally this bullish market should hold at strong levels and continue upward action to the OP. So definitely it will depend on the statistics that we will get, but from a technical point of view, market should not taken out of the C point. So if it will happen that market will break the confidence, this already will be not very friendly to overall bullish scenario. But especially if market will taken out of the C point, it will mean that ABCD pattern is cancelled. And in this case, we should be ready for the deeper drop on the market. So that's why currently we will keep an eye on this area. Besides, if you are searching chance to take the long position, here is how you could do this. So that's support. Now let's take a look at the hourly chart. On the hourly chart, on the slope on the way down, we have actually this here. As you can see, we've got minor head and shoulders pattern. On the hourly chart, we have ABC top pattern with the XOP that stands at the 14.26, and 1618 butterfly could be formed to finalize this downward action. So 114.26 plus spread that you have on the broker, approximately 2-3 pips. It's 114.28, 29. So that's where you could place the order for taking the position if you intend to take the long position in the current circumstances and you would like to bet on some weakness in the non-farm payrolls release. Because from the technical point of view, this is perfect setup for a bullish market. If we wouldn't have the non-farm payrolls today, I would say, well, this is the step that we'll try to use, because at least the minor pullback here will happen 30-35 pips. That will let us to protect our position with the break-even stop, and this will be relatively safe trade. This trade with a low risk, but with the non-farm payrolls on the horizon, it becomes not as safe as it could be. But anyway, it doesn't impact on the picture. So the technical situation, the picture on the charts mostly stands very good. So that's the scenario that we could keep an eye on. If this scenario will fail, the market will just collapse for this confluence, will break this overall agreement that confluence support, as you understand, is in general strong area. But if market will drop here below this area, it will be just a few pips to the C point, breaking on the C. It will be bearish reversal swing, and that will suggest at least more significant drop down, or maybe it really could lead to the changing situation on the daily chart as well. But we will see what will happen. So if I will just suggest that if Fed has changed the statement that has been done yesterday, definitely it should be naive to suggest that the Fed doesn't know what the payrolls we will get today. So definitely they have already investigate, discover the numbers, make the analysis, and understand what's really going on. And I think that this changing of the statement and eliminating the phrase on as possible another rate tightening from the statement, it's really means something. And maybe if I will be right, so really the non-farm payrolls could be not as strong as market expects. But we will see. This is just a suggestion because, as you know, guys, I am not trading the releases of the important statistics. I'll try to take position as numbers already have been released, and if they correspond to my expectations, better to take a position on some retracement after that. So that's the picture that we have on the EUR. Let's see what we will get on the statistics release.